Now, we have our eyes on emerging markets today as oil climbs more than 3%. For the latest developments, we turn to Mark Mobius, chairman of Templeton Emerging Markets, where he helps manage $50 billion. He joins us on the phone from Nigeria. Mark, welcome to Fast Forward. Thanks for joining us. Let's start off with why you're in Nigeria. What are you doing there?
Well, we're looking at investments here. We already have a lot of money in Nigeria in our Frontier Fund, and we're putting more money in, so we're talking to companies here to see what the state of is.
What kind of investments are you looking at specifically? What kind of investments are you nurturing already there in Africa?
The big ones are the banks. The banks have gone through a tremendous change here. Consolidation has taken place, and it's continuing. So some of these banks look pretty good. We're also looking at the oil sector and the power sector. There's a tremendous shortage of power in this country. In fact, I got stuck in the elevator in the hotel twice today because the power went out. So there's really a need for more power and more energy generally.
So are you focusing on investments that cater to domestic consumption? Because when I think of Africa lately, I think of at least a part of a continent that's catering to the needs of China's growth.
Well, yes, of course, you know, Nigeria is a big oil producer and a big gas producer. But if you look at the GDP, you'll find out the big part of the growth, which is now about 7%, is domestic. Domestic consumption is really what's growing here. The demand for every service you can think of is just growing by leaps and bounds. Just taking cell phones, for example. And by the way, that's another area we're looking at is telecoms, because the number of subscribers is growing very, very rapidly.
What about dependence on growth in China? I mean, I know that you are seeing at least a slowing of the growth there, right? What do you expect out of China as far as its growth pattern?
I think growth in China is going to get to a pretty high level. I mean, even if it goes down to 8 or 7%, that's still very, very high growth. So I'm not too worried about that. I think China is going to be looking at places like Nigeria for raw materials. But generally speaking, this country, at least, is not so dependent upon China's growth. It's more dependent upon what's happening domestically.
How dependent is it, Mark, on what's happening over here? Because obviously commodities, including all those raw materials, oils, metals, especially, went higher when the Fed was buying bonds, quantitative easing 1 and 2. Do you expect a QE3, and does that play any part in your commodities investment there?
Well, I do expect QE3 in the sense that they may not call it that, but I think that's what's going to happen. You're going to get more money coming into the system, and that, of course, will bring up commodity prices. But over the longer term, even without QE3, the demand for commodities of the emerging countries is growing pretty rapidly, and that's going to sustain a general upward trend in prices, in our view.
So is that, I mean, you think really a growing emerging market there? Do you expect Africa to have people moving into the middle class the way investors expect it to be to happen, or see it to be happening in China?
Yes, they will go through the same pattern that China and other countries have gone through in the emerging markets. Of course, in Asia, the growth has been pretty rapid, and they've really achieved a lot of growth in the middle class. In Africa, they got a long way to go, but the growth rate is going to get them there pretty fast.
Let's move a little bit north and talk about what's going on in Europe, because it's been moving markets here, you know, on a headline, on a whim, moves markets here a few hundred points. I know that you are overweight Eastern European banks. What do you think about the situation in the main part of the European Monetary Union?
Well, I personally think that they are going to reach an agreement. What they're doing now, of course, with all these delays, is trying to get Greece to come to the table with the reforms. But at the end of the day, they will reach agreement, and the euro will stay together, and I don't see any problem going forward. It's just a lot of pain and suffering in the short term. And, of course, that will lap over into Eastern Europe, where we are. Eastern Europe, of course, will be impacted by this. Yeah, I think in the longer term, in a positive way.
So you're optimistic on the European situation, including the situation of Greece. You don't think that a default or a dropping out of the European Monetary Union is likely for Greece?
No, I do not. I think of course, there will have to be a haircut, but at the end of the day, the euro will stay intact and Greece will be part of euro.
All right, hey, Mark, we appreciate your time today. Thanks for joining us. Mark Mobius there from Templeton on the phone from Nigeria.